and welcome to Financial Intelligence. In this video, I want to talk about how investors' attitude toward the stock market has been drifting away from long-term investing to short-term speculation. In my opinion, this is mostly fueled by the US government's loose approach to monetary and fiscal policies. These policies have flooded the market with lots of liquidity, resulting in the stock prices spiking dramatically. Retail investors have responded to this new paradigm by taking on more leverage as well as by adopting short-term trading strategies. I'm going to share with you 3 charts that clearly demonstrate this shift in the attitude of retail investors toward the stock market. The first data point that I'm going to share with you is based on Google's search volume. The second one is based on the volume of trades executed by retail investors. And the third one is by looking at the total balance of margin accounts owned by retail investors. Before we get started, don't forget to like this video and subscribe to this channel and hit the notification bell so that you don't miss any of my future videos. Let's get started. Number 1, trends in Google search. As you might know, one solid way of tracking societal changes is to look at Google search volumes. Google provides a free tool called Google Trends, which allows you to look at the relative volume of Google searches for terms and phrases over time. This tool doesn't give you the number of monthly searches, but it shows you how the relative volume of searches has been trending over time. For this particular analysis, I pulled the data for the phrase day trading from Google Trends, as you can see in this chart. Since the early 2020, there has been a huge jump in the relative search volume for day trading. The volume has increased by 3x or 200% after the pandemic. This coincides obviously with the significant change in the US government's monetary policies, which were adopted in response to COVID. This is a clear sign that retail investors are moving away from traditional long-term approaches to more short-term strategies such as day trading. Number 2, the volume of retail trades. The second chart that I'm going to share with you shows the contribution of 4 types of traders to the total volume of trades in the equity market. In this chart, the blue line shows the percentage of trades placed by retail investors through wholesale brokers such as Robinhood. The other 3 lines show the volume of trades executed by exchanges and by institutional investors like pension funds. The key takeaway from this chart is that the share of retail investors has increased from 17% in the early 2020 to roughly 25% toward the end of 2020. This big shift in the mix is driven by 2 key factors. Number 1, some retail investors have had access to more capital to invest because they were able to save more money during the pandemic. And number 2, the frequency of trades placed by retail investors has gone up as well. Since the 8 percentage point jump from 17% to 25% cannot all be attributed to the increase in savings, some of this increase must have been due to increased trading frequency, in other words, shorter holding periods by retail investors. Number 3, debit balances in margin accounts. Another interesting data point is to look at the total balance of margin accounts reported by FIRNA. A margin account allows an investor to borrow against the value of the assets in the account in order to purchase new positions or sell short. The volume of margin accounts is a good indication of how much risk the retail investors are taking to chase the market returns. When there's a lot of optimism in the market, some people may feel that they are missing out on the huge returns offered by the market and decide to borrow money to purchase stocks. Using margin accounts allows investors to increase their leverage, which means that both their gains and losses are going to be multiplied. Margin accounts are mostly used by investors who are willing to take on more risk to chase higher returns. Therefore, tracking the volume of margin accounts is a good proxy for measuring the level of speculations in the stock market. As you can see in this chart, debit balances in margin accounts have been increasing rapidly. They have gone up from $560 billion in the early 2020 to roughly $850 billion in April of 2021, a 50% increase. This increase in the amount of money poured into margin accounts show a dramatic shift in the attitude of retail investors. More and more retail investors are willing to take on large risks by using leveraged accounts to chase after higher returns in the stock market, which are created by loose monetary policies of the government. In summary, I provided you with 3 data points showing that the loose fiscal and monetary policies adopted by the US government have dramatically changed the attitude of retail investors. The extremely high returns in the stock market has allured many retail investors from a long-term value investing mindset to a short-term day trading approach. This means that retail investors are trading stocks more frequently and are also taking on more risk by using highly leveraged margin accounts. I hope that you liked this video. If you have any suggestion or feedback, please add them in the comment section below. And don't forget to like this video and subscribe to this channel, and also hit the notification bell so that you don't miss any of my future videos. Thank you and take care.